Okay, so once again, I welcome our dear brother, Mr. Monsoor Rahman Jyoti, to join with us. He is one of the deputy directors of Bangladesh Bank, the Central Bank of Bangladesh, the authority actually of the banks, the lender of the last resort, We at IIUC have a very prestigious department. This department is the Department of Economics and Banking. And I am teaching here. I have been with you since 2016 here. Before that, I was in Dhaka campus. And I actually explored Mr. Monsoor Rahman Jyoti in Dhaka campus. One of his relatives was studying in my previous Department of Business Administration in IIUC Dhaka campus. So by this way, actually, I got him. He is actually one of our stakeholders of IIUC, as he has got some of his kids studied here at IIUC and got degree from here. And I already have informed you that he is now studying Master of Development Policy at Hiroshima University. So we are currently teaching one course in our master's program, that is Master of Social Science, MSS, in Economics and Banking. So today we have invited some of our students to hear from our brother Monsoor Rahman Jyoti. He will talk about the financial market of Bangladesh. As you know, in our course, financial economics in Islam, we have studied some topics related to his area. Some of those topics are like money market and capital market. Especially, we taught you some instruments of money market and some instruments of capital market, like bill of Treasury Bills, like bankers' acceptance, like certificate of deposits, CD, and some other instruments of money market, and some instruments of capital market, like bond and like stocks, like mortgage, these things. Our secretary is okay. Let me check, please, secretary will join. Okay, our Professor Saiful Islam from Chittagong University, he was supposed to join with us. Maybe for some technical problem, he could not join. I have sent him a new link. I think he will be able to join very soon, inshallah. So if he joins, then we will also hear from him. So before that, I would like to stop my sharing from here, and I would like to invite our honorable key discussant of this session, Mr. Monsoor Rahman from Japan. Yes, please unmute your microphone and then please talk. Could you please unmute? Yeah. Your microphone is in mute mode. Could you please unmute? Let me unmute him. Yeah. We cannot hear your voice.
Can you hear my voice?
Yeah. Now we can hear.
Okay.
Please.
So, is there any, reflection or anything? Or can you hear?
It's clear. Yeah, it's clear now.
Okay.
Please go on.
Okay, I'm proceed.
Now you have got your microphone mute, and we cannot hear you. All right.
It's okay.
Yeah. Okay.
Okay.
Thank you.
So, sir, can I proceed?
Please do.
Okay. Thank you. Thank you, everyone. Sir already introduced me, so I am not going to introduce again. So today I'm going to talk about the financial system in Bangladesh, but my concentration will be on the monetary system, or money market, or capital market. So I will just go, an overview of the financial system in our country. So the financial system, you will find different definition or different classification of financial system of Bangladesh in different books in different way. But in Bangladesh Bank as a central bank, we define the financial system in three sectors, like formal sector, semi-formal sector, and the informal sector. Hello? Hello?
Yes, we can hear you. Please.
Okay, thank you, sir.
Yes.
So formal sector, the formal sector actually constitute of a financial market, which also constitute a money market, capital market, and foreign exchange market. In money market, there are some player in money market, bank, NBFI, primary dealers, and capital market, there's investment bank, stock exchange, and foreign exchange market, there is authorized dealer. I will talk about these issues later in details, but here I'm just giving a overview. So financial market, the money market, the regulatory authority are Bangladesh Bank, the central bank, and the other stakeholders are bank, non-bank financial institution, primary dealers. I think then someone maybe knew the primary dealer in a new word for them, but I will explain it later. And the capital market, the regulatory authority is Securities Exchange Commission. Everyone know this. And the stakeholder are investment bank and stock exchange. So in money market, what is money market? Money market actually it comprises banks and financial institutions which are act as an intermediary, and we have 60 banks. Among them 20 are primary dealers. Bangladesh Bank gives them permission and license and make them as a primary dealer to deal in the money market actually. So they also do part in the interbank transaction. They do the research, repurchase agreement, or you know about the repo, and they also done the reverse repo, which the opposite of the repo. These are the money market instrument, and they also take part in the auction of the Bangladesh Bank bill, Treasury bills, and the government securities, other government securities. So there is the debt market also. What is debt market? Debt market is where the debt instrument like bond are sell and buy. This is the debt market, and this debt market is actually in the other countries it is a constituent of the capital market money, but in Bangladesh it was totally managed by the central bank, Bangladesh Bank, and we also have 2 or 3 departments to manage this thing, like debt management department, mortgage office, and DEB, something like this. And in this department, and there we are actually buy and sell and work as a government and bankers to finance the deficit financing or the fiscal policies instrument. So here the bond, which is more than 1 year, like 2 years, 5 years, 10 years, 15 years, 20 years bond. These are, purchase and sell here in this treasury bond market. So there is the issue. The bond market in other countries, in the bond market, these are really very strong bond market. But in our country, the bond market is not very strong. And we also have the secondary bond market. I think a lot of people don't know about the secondary bond market. You can buy a bond and you can sell it in a secondary market like anything. But people don't do this. So that's why our bond market is not increasing or boosting. So then we have the capital market. Everyone know about this market as a stock market, because this is our share market. General people know this as a share market. Here the primary issue and secondary issues are secondary shares are issued, and there is a foreign exchange market. This market is actually defined by us because the foreign exchange market is also a part of the money market. So somewhere you will find that foreign exchange market is part of the money market, but sometimes because the foreign exchange market is so huge in our case now, so that's why we are differentiate it other than the money market. So this is the foreign exchange market. So actually the Foreign Exchange Regulation Act, which is implemented by Bangladesh Bank, and accordance with the Foreign Exchange Regulation Act, we just maintain this convertibility of the taka and the other currencies and manage the foreign exchange reserves. And there is also one player like authorized dealer. We give license to the authorized dealer or some bank or branches to deal with the foreign exchange, and that's how the foreign exchange market grows. So Bangladesh Bank actually adopted the floating exchange rate in 1993, and then we are, okay. So what is the central bank? Bangladesh Bank, what is the regulatory authority in the money market? Money market in the central bank is the regulatory authority. We all know that. And according to Bangladesh Bank Order 1972, our Presidential Order 1972, and which is again amended in 2003, the central bank is act as a central regulatory authority. Sorry, I think I should. So what is the function of the central bank? The main function is the formulation and implementation of monetary policy and the credit policy, and the regulation and supervision of the bank, acting as bankers to the government, money laundering prevention, and maintain and policy making for the credit growth and credit information. So actually, these are the monetary policy. These are the objective of monetary policy and consider money market. Like, what is the main constituents of the money market? The price stability, mainly the price stability, and the sustainable growth, high employment, economic. These are the main function of the money market. And what are the stakeholders in the money market? There are 60 banks. Among them, five are non-scheduled bank, and we also have 34 non-bank financial institutions in the money market. And in the insurance, we have 32 life and 46 non-life insurance company. I don't know why it happens.
Excuse me, our participants, please don't try to bring any effect on the slide. Yeah.
Yeah, I have seen some. So these are the formal sector, like bank, non-bank financial institution, insurance, and the microcredit. These are the part of the same formal sector. And in the semi-formal sector, we have some specialized financial institution, like house building finance, Polli Commercial Foundation, Shomabai Bank, Grameen Bank, and NGOs. And we also have some informal sector, like money lenders, landlords, friends, I mean, whom we can take money and bring money, lend money. So these are the informal sector. These are all parts of the money market. So there are some financial intermediaries, like there are 60 banks, and among them 42 private commercial and 9 foreign commercial, and conventional bank is 34. Among them, Islamic bank is 8. So we have a lot of Islamic bank nowadays. And we have 34 non-bank financial institutions. Among them, 2 or 3 are government owned, and private financial institutions 29. We have 78 of non-financial insurance company, and we have 702 micro-financial institutions. So I will just skip this thing because I think I will just give an idea about the financial market and the money market. So we know about the activities of the bank, so I'm skip this thing also, and also financial institution. But there is a, difference between the bank and the financial institution. That financial institution cannot take demand deposit, and they cannot issue the check. Their deposit is not checkable deposits. But and they are also operated by, or maintained by, or supervised by the Financial Institution Act, but bank are supervised by the Bank Company Act. So these are the differences between the bank and financial institution. They cannot issue check, pay order, or demand draft, cannot receive demand deposits, and they cannot involve in the financial exchange or the foreign exchange market. We already talked about the foreign exchange market. So financial institution is not a part of the foreign exchange market. They are only the part of the money market.
Besides this, could you please give some examples of financial institutions like non-bank financial institutions?
We have like a Reliance leasing, like a leasing company, and Reliance Leasing, Longkabala Finance. These are the IDLC. These are all financial institutions.
All right.
They cannot
Thank you.
take, they cannot take deposit. I mean, like demand deposit. I mean, they can take deposit for, I mean, 6 months older. I mean, they can take a deposit like which is 6 months, at least hold in 6 months in that institution. But they cannot take deposit like a current deposit, something like this. So I can take my demand deposit when I demand. So that's named the demand deposit. So they cannot do it.
Exactly.
And they also cannot involve in the foreign exchange market. They cannot buy or sell or do any export, import business, anything. And there's another option. They cannot involve in the foreign exchange market and the capital market. They only part in the money market. So there is the capital market intermediaries, the stock exchange. We have two stock exchanges, Dhaka Stock Exchange and Chittagong Stock Exchange. And capital market intermediaries, they are also asset management company who authorize the issue, and they are also act as a portfolio manager of the mutual fund. And the credit rating company. These are also the part of the capital market intermediaries. There are 5 credit rating companies still have get permission from the Securities Exchange Commission, and we also have 15 asset management company so far. And ICB is a big part of the capital market, and they are especially they established on a special rules and regulation and acts. So these are also a big part of the capital market. Actually, ICB is the only investment bank in Bangladesh. And insurance sector is regulated by the IDRA. IDRA means Insurance Development and Regulatory Authority, which was previously a department of Bangladesh Bank. Then Bangladesh Bank deported it and make it its own institution for the insurance sector. So we have 78 insurance, and among them 32 are life insurance and 46 are non-life insurance. And for microfinance, we are regulated by the MRA, Microcredit Regulatory Authority. And they actually do the, this is also, MRA is also part of Bangladesh Bank. Previously, it was a department of Bangladesh Bank. Then it was become a new institution for its independence and anything. And they actually regulate all the microfinance in our country, all like BRAC, Grameen Bank, though Grameen Bank nowadays regulated by Special Act, Grameen Bank Act, and which is actually regulated by both Bangladesh Bank and the MRA, but other microcredit regulator, microcredit organization, microfinance institution, everything was regulated by MRA. But there is a special thing that only 10 large microcredit institutions constitute 87% of total saving of the sector and 81% of the loan of this sector. So if you can regulate only the 10, or if you that 10 microcredit financial institution, then you can totally control all the microcredit loans and savings in the country. So primary dealers, which is actually very important part of the money market in Bangladesh, we give permission to 20 banks in Bangladesh to get license of primary dealers. So these are the primary dealers. Actually, if I or you or anyone want to buy some money market instruments, like we want to buy some government securities or Bangladesh Bank bills or bonds, then we have to go through these primary dealers. I mean, I cannot buy from, I mean, like in any bank, I can go and buy government securities. I cannot do that. If I want to do that, I have to go through these primary dealers. I have to go through any of these banks. I have to open an account, then I have to apply for the securities or the instrument, then I can buy these securities or these bills or bonds. So these primary dealers, there's 20 primary dealers, and among them there are government banks, private banks, and foreign banks. Everyone is there. So as a whole, this is the financial system, financial instrument, financial institution, and the financial market are part of this system. So primary instrument, financial instrument like primary and secondary, and both of these are divided into security and non-security instrument. So the institutes are banking and non-banking, and in banking you can find all the banks, and in non-bank you can give all the non-bank financial institution, insurance company, and others. And if we want to segregate the market, then we can say that money market, capital market, security market, and non-security market. And security market is a non-issue market, and the secondary market. And non-security market is actually the banking market, which is the banking loan and other things is happen there. So as a whole, we can say these are the another perspective of the financial system or the market. Money market and forex market are as a whole, because it was controlled by the Central Bank of Bangladesh. That's why it was consolidated in the Bangladesh bank sector, and the capital market is the Securities Exchange Commission, and insurance is IDRA, and microfinance is under the MRA. So if we consider all the things, then we can actually come to this here. I mean, this is the consolidation of this whole lecture, like their supervisor, we have financial institution, instrument, and the market. And the institution, we have banking and non-banking. And in banking, we have commercial bank and specialized. And non-banking, we have investment, leasing, housing finance, and others. And under the financial instrument, we have primary and the secondary instrument. We have direct instrument, we have indirect instrument. And there are some examples like loan, advances, share debenture, or primary or direct instrument. And in the secondary, we have deposit, mutual fund, unit certificates. These are the secondary or indirect instrument. And in the financial market, money market and capital market, and there is security market and the non-security market also. So I am stop sharing now, and I will go on another one. So we already talked about these issues. I'm in the financial system of Bangladesh, so I am just skipping this thing, financial market. Okay. Now the money market. So what is money market? Money market is actually where the short-term debt securities are deal there. I mean, less than 1 year. Actually, in our country, the money market is actually deal with a long-term loan, but actually money market is for the short-term loan or the debt security dates which are lower than 1 year. But in our country, the banking sector or the money market is a huge part of our economy, almost 80 plus percentage. In percentage, it will be 80 plus. But in other countries, the banking is like a 40 and the capital market like 60. But in our case, or in any developing countries, the banking market is our money market is a huge part. So why money market is actually, because money market is actually very liquid, because the low risk in the debt securities, because you have the collateral, you have a huge workforce for this market, and you have a very regulated body. So that's why money market is always a very low risk debt securities, because money market or the banking sector is the mostly regulated sector in the world. So these are the money market instrument like Treasury Bill, commercial paper, Euro-dollar, federal funds, certificate of deposit, bankers acceptance, repos, reverse repos, labor market, and almost all of these are issued in, and used in Bangladesh. But we use different names, like in federal fund, we call it a reserve requirement, something like this. And bankers acceptance is also used in different name in many different loans. Like in foreign exchange, it told as a letter of credit, and guarantee. There's a lot of other name, but these are the common name. So I will talk about the Treasury Bill. So this is the actually the Treasury Bill is a government treasury to government securities. Actually, when it's a part of the fiscal policy, and when government try to implement his annual development plan or fiscal policy, then in Bangladesh and in all of the world, government has the deficit financing or deficit fiscal policy. So how they raise their money, they sell their money to the people or the public, and these are by way of issuing the Treasury Bill. So these bills are actually, when this maturity is less than 1 year, this is the T bill or Treasury Bill. When the maturity is more than 1 year, like 2 years, 5 years, 10 years, then it's Treasury bond. So these Treasury bills are one of the instruments of a money market. And there is a certificate of deposit. Actually, this certificate of deposit is actually the time deposit, which is deposited in a bank. So any lender can use this certificate of deposit to get the loan or get a debt from other. So bank will actually accept this certificate of deposit. We also have this thing, and because in the banking sector, and there is a CIB in the Bangladesh bank, so you can get the information then whether these people or this person or this depositor has any default loan or anything. So you can actually verify the deposit. So that's why it's also very popular in our country. And the commercial paper, this is actually issued by the large companies, but in Bangladesh, this commercial paper is really not very popular nowadays. And there's a banker's acceptance. This is the, hugely used instrument in the foreign exchange market and money market, because whenever there is a lot of companies and a lot of people want to do some work in government sites or want to do business in foreign exchange, then they have to accumulate a lot of money, but it's really hard to accumulate a lot of money. So that's why they use this banker's acceptance. I mean, a bank or a bank branch will give acceptance on behalf of a person to make a guarantee to his buyer or his seller. So this is the banker's acceptance, and we use this. This is very common in our country. And euro-dollar is a currency deposited at a bank outside of the country. I mean, in our case, it's like I think you maybe know about the Nostro account or the Vostro account. So every country, every bank in our country, we have Nostro account and Vostro account. So when there is actually, this is also part of the foreign exchange market, and foreign exchange market is actually the part of the money market, because these are interrelated. So whenever one exporter, he has some money which will be export repatriation, so he will get some money from his importer. So his money is deposited in the other country's account. So this can be used as a monetary instrument. And repo and reverse repo, these are the mostly used monetary policy instrument or money market instrument in our country. I mean, actually, monetary policy instrument or money market instrument has a large lag period. I mean, fiscal policy lag is so small. I mean, fiscal policy, you can get the result within 1 month or like this. But for the monetary policy, the lag is like 6 months or 1 year. Sometimes it may be 2 years if you do any wrong in the instrument. So, but the repo and reverse repo, it has a shorter lag. So nowadays we use this instrument more. Repo actually means repurchase agreement. I mean, I sell or purchase anything, and I will promise that I will purchase this securities or bond or bill a few months later or few days later. That's the repurchase agreement. So actually, by repo, we injected money in the economy, and by reverse repo, we withdraw money from the economy. By this way, we control the quantity of money in the economy. So I will talk about this issue in the later. So I will just give an idea of the instrument here. So I will talk about how this instrument works in the money market or in the capital market in my later slides. So you can see that here is written that a dealers can government securities to an investor on overnight basis with an agreement that he will buy back those securities in the next day at a slightly higher price, because the interest rate of those period will be added. So that's why the price become higher. And there's the federal funds. You maybe read about federal funds in the books, but we call it reserve requirement. I mean, every bank, when you deposit some money in the bank, I mean, you deposit 100 taka in a bank, the bank cannot give 100 taka loan to the people. He have to put some money in as a reserve. That's called the reserve requirement. And in Bangladesh nowadays, it is 19.5, the total reserve requirements. Among them, 13 is SLR. SLR is statutory liquidity reserve, and the 5 or 5.5 is the CRR, I mean cash reserve requirement. So they have to reserve those 20 or 19.5% of money to the central bank, and that 81 or 81.5 taka he can give anyone, or he can give loan. He can give as a loan. So this is also money market instruments. By how? I mean, we can increase the CRR and SLR. Like we can increase CRR to CRR and SLR to 18, or we can lower the CRR and SLR to 18 and increase the CRR and SLR to 21%. Then the amount of loanable fund will be decreased or increased. That's why actually we can control the money market. And here's the Libor market. Libor means London Interbank Offer Rate. It was actually the part of the foreign exchange market, but as in our country, because the foreign exchange market and money market are actually interrelated. How? I mean, no central bank in the world cannot control the both at the same time. If you are doing, I mean, like I want to control the interest rate of my country, I want to lower the interest rate of my country. So if I do that, I cannot control the exchange rate of my country. So I have to give up that. So, but if I want to control the exchange rate of my country, like I want that my dollar rate will be within 75, then I cannot control the interest rate of my country. Then it will become 20, the lending rate maybe go to 15 or 20 like this. So that's why these are also part of the money market. So, but before that, I mean, before 2003, we have, okay, I will talk about the foreign exchange market in a later slide, so I will talk about this there. But there we have the floating interest rate. So that's why, and floating exchange rate, that's why this is an important part of the money market nowadays. So we have finished the instrument of money market. So here is the instrument of capital market. So in capital market, we have the bond market, equity market, and derivative market. But this bond market is totally, I mean, is managed by the Dept market, and Dept Securities is managed by the Bangladesh Bank and the Minister of Finance. It's not a part of the capital market in our country. And derivative market is also, I mean, the derivative, there is some derivative product like forward, future, options. So these are also part of our foreign exchange market. So actually in capital market, we have equity securities in our country. So in bond market, what we have the treasury notes and bonds. And federal agency debts, municipal bonds, corporate bonds, these are not found in our country, actually. We don't have the, municipal bonds. So treasury notes and bonds, these are the, actually, I already talked about this, that we, in money market, we have T-bills, treasury bills, and which is what, whose maturity is less than 1 year. That is the treasury bills, and those maturity government securities which maturities are more than 1 year, like 2 years, 5 years, 10 years. Those are the treasury bond or government bond. So these are actually part of the bond market. And federal agency debts, actually these are not used in our country, so I skip that. And municipal bond is also not part of for our country. Corporate bond, actually in the capital market, there is some bonds which is considered as corporate bonds, like some mutual fund and some groups, they use this as a capital market and raising their capital. So the corporate bonds actually secured and unsecured. When it is secured is bond, when it is unsecured, it is told the debenture. So we know about that. And there is also senior, and the bond has the senior and subordinate bond. The senior and subordinate bond has that, I think you all know about these issues. What is senior bond and what is subordinate bond? The subordinate bond is actually the bond which is subordinate to other bonds. When the company will be liquidated, then this bond or bondholder will be the subordinate to others. So he will get his liability the later than the senior bonds. And we also have the convertible bonds. Okay. Then we have the secured. Collateral is actually a bond. When the bond, there is a back, what is the bond? Bond is the secured collateral, because in bond, there is always some securities behind it. So that's why bond is always a secured. And the debenture is an unsecured bond, because for debenture, there is no securities is behind it. So there is no collateral, nothing. So that's why debenture is called unsecured bond. And I already talked about this, that senior bond, when the company liquidated, then the debt of this senior bondholder will have the preferences for this bond. And the subordinated bond, when the company will liquidate, then the subordinated bond will be the last person to get this money. Then we also have a callable, call provision. Company can repurchase or the bond when he issue, when he wish. So that's why he can call for the repurchase of the bond. That's why this is called the callable bond. And we also have the non-callable bond. And we also talk about this convertible bond. So now the equity securities, these are the main part of our, actually the capital market or the stock market. In the stock market, we issued a lot of companies, large groups, and everyone can, if he get the permission from the Securities Exchange Commission, then he can issue equity shares or common shares, which you know. But is there, there is a distinction that any government, no government companies or no government institution can part here. They cannot issue common stock. That's why, all government institutions use the bond. That's why government institutions are not a part of this equity market. Because when you were, your common stock is you own the ownership of that company. So that's why the government is not part of this. That's why government raises its needs by issuing bond and securities. But many government companies like Sonali Bank or Janata Bank, which is a public limited company, they can issue securities or common stock for them. to raise their money or raise their capital. So in the equity market, we have common stock and preferred stock, and preferred stocks are, there's a distinction between the common stock and preferred stock. What is the difference? Let's check. In the common stock, you have voting rights. You can get the dividend from this, and if the company liquidate, then you will get the money later than the preferred stocks. So that's why it's that's why the other stocks is called the preferred stock, or preference share. We can also tell it as a preference share. So the main features of the common stock is that you have voting rights. You can select the board of directors. You can vote for the managing director of that company. You can attend the AGM, and you can discuss about the dividend declaration and these things, because you are like an owner of this company. And for the preferred stock, you don't have the voting rights. You cannot vote. You cannot select and discuss about the dividend or something. But yeah, if the company liquidate, then you have the preference to get the money first. And for the preferred stock, the dividend is a fixed amount. But for common stock, it is always changing with the dividend declaration. And then we have the derivative market. So in derivative market, we actually forward future options and swap. But in our country, we actually don't use future and options. In 2019, when I was in Bangladesh, then we just give permission for one swap, one future transaction, as far as I know, yes. And that was interest rate swap, and we give permission to the Eastern Bank, for Grameen phones, one transactions. So, I mean, actually the future and options, this type of transaction is, and this type of market is not available in our country, because you need very efficient people to deal in this market in future and options, because you have a lot of risks in there. You have interest rate risk, you have exchange rate risk, you have market risk, you have, I mean, that's why in our country, no banks, no player, no stakeholder use the future and options. But swap and future, these are, I mean, very common in our country. So actually derivative instruments, it's actually part of the financial market because the exchange rate, these derivative instruments are derived from the actual transaction. So that's why it is called the derivative instrument. And the fluctuation of the foreign exchange rate of taka with dollar, with yen, and the commodity price, like oil price, like gold price, this also, and also the who will be the president of USA, all of these things are related in this market. So that's why derivative instrument is really, I mean, very risky instrument we use nowadays. So in a summary, you can see that there's the money market and treasury bill, and these are the instrument of money market, and in bond market, equity market, and the derivative market. I think we already talked about this thing, so I will just skip this. So is there any question?
All right. Thank you very much. Thank you very much to our honorable guest, Brother Monsoor Rahman.
So I am talking about another issue.
Okay.
Money market. Yeah.
All right. Okay. Yes.
So actually, what is the money market? I mean, this is the money market policy instrument and the implication, how the money market works and how the money actually goes into the system, and how the instrument, I already talked about that repo, reverse repo, open market operations, and the bank rates, these are worked. So now we are using the instrument, how the money is circulated in our country. I mean, actually, we cannot say that, how we can do that? It's like in your pocket, like your salary is 50,000, in your pocket you have 1,000, but in Bangladesh Bank, we can influence you to hold that money or expense that money or use that money in the economy, because we use this instrument. So let's check what is the goals of the monetary policy. The goal is actually sustainable output and the employment. These are actually the function of Bangladesh Bank. Our main, a lot of people maybe think that Bangladesh Bank only uh, looks like they collect money from people and lend money, but not like that. We don't do anything of this. We actually, the main issue of Bangladesh Bank, a lot of people think about that the main function of Bangladesh Bank is printing money. These are also not a main function of Bangladesh Bank. The main function of Bangladesh Bank is actually the money market operation, make the monetary policy, and how the money, quantity of money will be in the economy, what will be the velocity of the money in the economy, and the growth and the unemployment, what will be the unemployment, lowering the unemployment, create jobs, and inflation is also a very important part of our work. I mean, the lowering the inflation. So if the price increases, you should blame Bangladesh Bank. If you don't have the job, you should blame Bangladesh Bank. So actually, that's why the monetary policy is really important in any country. So there's a difference between the monetary policy and the fiscal policy. Fiscal policy, which is declared by the finance ministry or the minister of finance, it is done in once a year. But the monetary policy actually declared 2 times in a year, in January and another in July. I mean, after 6 months, we change the monetary policy. We change how the money will be, how many money or the quantity of money in our country. So monetary policy can be expansionary or contractionary, depending on the macroeconomic condition. Like suppose, why not expansionary? I mean, you can expand or you can increase the growth of the economic growth. Like, yeah, I mean, I can have a growth like 10 plus, 10% growth every year. But why not we do that? Because of the inflation. If I want to do a 10% growth, then there will be huge amount of money in the economy. The price will be huge. So the inflation will be huge. It will impact the poor people of our country. So that's why every central bank, not take the maximum amount of growth in their policy. So we have to select a growth which is almost, which will not increase the inflation as much as it will be burden for the people of the country. So expansionary monetary policy is when we want to have higher growth. We want a higher growth in the economy. And the contractionary is when we want a lower inflation. So in expansionary, we actually concentrate on the growth, and in contractionary, we actually concentrate on the inflation. So these are also, how the instrument I will use. So the tools and the why it's not. So the tools we used in monetary policy. Okay, can I?
Yes.
I just opened the file in another format because there's some problem with the file.
All right, no problem. We have got our Professor Dr. Mohammed Saiful Islam among us. So we hope that our honorable guest will finish his lecture soon, and then we will hear from our sir. And then we will conclude.
Sorry, let him continue. It's really
Okay.
interesting.
Okay, sir. Okay. Okay, sir.
These are the, all tools and instruments for implementation of the money market or the monetary policy, like bank rate, open market operation, repurchase agreement, reverse repo, SLR, and CRR. So by this way, we control the money supply and control the interest rate and the investment, loans, and the credit growth of the country. So in open market operation, we have treasury bills and treasury bonds, and the instruments are like a auction. We have auctions in Bangladesh Bank. So the treasury bills and bonds can be buy and sell in this auction, and any people, general people, banks, companies, even non-resident Bangladeshis can purchase these bills and bonds. And we also have policy rates such as a repo and reverse repo and bank rates. Bank rates nowadays it's 5%, and there is also reserve requirement, which is SLR and CRR, and these are also the policy instrument of us. And the reverse repo, these rates and the bank, the repo rate, these are actually changing. It changes all the time. So these are not fixed. So it's depend on the demand of the government securities in our country. And we also have the treasury bills, and which is less than 1 year, and we have the treasury bonds, which is more than 1 year. So open market operation and the policy rates are actually the indirect instruments in the market economy. And the direct instruments are the reserve requirement, which is the SLR, CRR, because whenever you put money in the account or the banks have to get the deposit in his account, it automatically calculates how much money you have to hold as a reserve requirement. And these are 5.5 in daily basis and in the average of 6 in a bi-weekly basis. So if any bank fail to maintain those reserve requirements, then he will get punished. We punish them, the chairman, the MD, the banks, not to maintain. And we also punish them to, in monetary terms, not to maintain this reserve requirement. So reserve requirement is actually a very direct instrument in the money market or monetary policy. And the open market operation and the policy rates, open market operation like repo, reverse repo, and selling on buy of the government securities, these are actually the indirect instrument. And if, almost 20 years ago, we have the direct controls. What is direct controls? Like nowadays, we don't told any bank to set the interest rates of the lending or the deposits. So it is done by the demand and the supply of the economy. But previously, we do something like this. We published that the no loan can be like 15%, more than 15%. No interest rate of any loan cannot be more than 15%. So by this way, actually, the direct control is used in the economy. But nowadays, it's totally absolute in all over the world. We also have the standing facilities. In the standing facilities, actually the discount window, but nowadays we almost avoided this standing facility because we done it through the repurchase agreement. So it is also part of the repo. So nowadays we didn't use this. And there is the intervention in the foreign exchange market. It's also part of the monetary tools, but I already told that if I intervene in the foreign exchange market, then I cannot control the money market, the interest rate market. of the local currency. So that's why after 2003, the money market is and the monetary policy become more easily controlled by the central bank or the Bangladesh Bank, because we implemented the floating exchange rate. But before that, we have that fixed in exchange rate. So fixed exchange rate like this, I have fixed the exchange rate dollar taka at 60 taka. So I have to fix this at any cost. So what happened when we have a lot of, dollar in our country? So we have to maintain this. We have to buy a lot of dollar currency. So then there will be a lot of money will be injected in the economy. So I can control the exchange rate, but I cannot control the taka interest rate in the economy. So that's why then we just go to the floating interest rate. We implemented this. So nowadays we are very active in the money market operation, other than this exchange market. There is also moral switch. It is actually a part of monetary policy. So we also have some unconventional monetary policy tools or the instrument. These are actually not for the normal time. These are actually when there is some pandemics or some economic recessions comes. The most important is quantitative easing. You can, I think everyone maybe heard of this thing. I mean, when you have some deflation, something like in Japan, they have deflation for a long time. So they implemented this quantitative easing. And also there's tapering. So these are very unconventional monetary policy. You will not find this monetary policy instrument in normal economy. You will only find this quantitative easing and tapering when there is some extreme condition in the economy. So there is some like forward guidance. We will not tell the bank that, okay, we will keep the policy rates like banking rates, SNR rates, or the CRR at lower. So it will give the confidence in the people. And we will also give a lot of liquidity for the financial institution, for banks and others. And we'll also buy a large amount of the public securities. So that's why there will be a lot of injection of money in the economy. And we also intervene directly in the credit market. We do that in our country nowadays. I like for the loan for the farmers or the agriculture growth, we intervene directly. I mean, every bank has to give loans to the agriculture sector, whether it is foreign banks or local banks or new banks. They have to give loan to the agriculture sector for 20% of their total loan. So we intervene in the credit growth also. So these are SLR. So for traditional banks, it's 13%, and for Islamic bank, it is 5%. Why 5% for Islamic banks? Because this 13% for the traditional banks is actually the government securities or government bonds and bills, which get the interest for this period they hold this. But Islamic banks cannot take the interest from like conventional bank. That's why we give them this privilege that they don't have to get those 13% as a SLR. And the deposit takers is 5%, and non-deposit takers, financial institution, these are 2.5%. And CRR, for CRR traditional banks is 5.5%, and for Islamic bank is already 5.5. I already told that. So this is the monetary transition or the money market transmission. Like our main concern is the inflation and interest rate and growth, and the exchange rate and the money growth. So these are the linkage, how this policy and the targets and the goals got. So you have to see that we have policy instrument, repo, reverse repo, T-bills auctions, and SLR, CRR, the policy rates and bank rates. And our main target is the reserve money, and our intermediate target is the broad money. So I think you have read about reserve money, M1, broad money, this thing in the finance and banking or banking courses. So I will not talk about this. And our main goal is the sustainable growth, price stability, lower the inflation, and the sustainable balance of payment. It's about the sustainable foreign exchange rate, I mean dollar taka rate of our country. And we have this foreign reserve, interest rate, liquidity situation of our country, domestic credit, and inflation and exchange rate. And among this variable, we actually implemented this policy. So the instrument reserve money and broad money, our main actually when we use the instrument, these are our main goal to increase or decrease the reserve money, and ultimately the broad money. Broad money is also somewhat called high-powered money. And how we do this, we change the interest rate, repo, reverse repo, we change the CRR, SLR. But CRR, SLR is actually, we usually don't do this, because if we change CRR or SLR at 1%, it will create huge liquidity in the economy, or it will withdraw a huge amount of money from the economy. So the lag of this monetary instrument is, we cannot say what will be the forecast. So we rarely use this issue other than the extreme situation. So reserve money or the monetary base or base money, the currency outside banks, so which is at the people's hands, plus currency in the deposit money bank, I mean currency in the vault of the banks, and deposit with the central bank of the banks. I mean, they have to put some money in our bank, in the Bangladesh bank. So these are all considered as a reserve money or the monetary base. And reserve money can also calculated by the net foreign assets and the net domestic assets. It is also equal to the broad money of the country. So we actually calculate in both ways. So the monetary base is equal to cash, currency in circulation plus reserve, and reserve is equal to CRR plus excess reserve plus board cash. Actually, I think you have all know about the quantitative theory of money, Phillips curve. All of these things are considered in the monetary policy and the money market when we actually use. So net foreign assets, and I am not talking about this thing. I will go to the money supply, to common measure of the money, narrow money, broad money. So our intermediate target is this broad money, because if you control the broad money, then you can control the whole economy or whole money supply. So I think everybody is learn about this thing in the banking courses. So M2, actually the broad money, I will tell M1 plus time deposit and money supply equal to currency plus deposit. Okay, this is the quantitative theory of money. Okay, and we also consider the money multiplier, and Friedman is really one of the greatest monetary economists in the world. The quantitative theory of his is MB equal to PY. We actually also consider this quantitative theory of money. I already told about this, that money multiplier, money supply equal to money supply and multiplied by the velocity of money equal to price level and the real output or the growth of the economy. Okay, I'm skipping this thing. Okay, now. So bank rate is the cost. How the Bangladesh bank. Suppose one bank is struggling with his liquidity. You give a check to the bank, but he cannot give you the money because he don't have the money, because he give all the money to the lenders and he cannot get back the interest payment. So he has some liquidity crisis. So at that point, to boost the confidence of the people, we give some assistance to the banks, and the interest rate which we give that assistance is called the bank rate. It's nowadays it's for a long time it's fixed to 5%. So when I give money to the banks, it's bank rate and it's 5%. So actually it's for short-term needs for the bank to meet his liquidity crisis. So how this bank rate or this discount rate can control the money supply. So you can see that if we increase the bank's rate, it will decrease the money supply. Because when you increase the bank rate, no bank will take money from you. So they will take money from the people. So that's why the money supply becomes lower, and it will decrease the inflation because the lower amount of money is in the economy. So lower amount of money in the pocket of you. So the inflation will be lowered. And if we decrease the bank rate, the money supply will be increased and the inflation or the interest rate will increase. And the reserve ratio is also like this. I mean, if we increase the SLR or if we increase the CRR, it will lower the money supply. Like nowadays, when you deposit 100 taka, a bank can give 81 taka loan to a lender. I mean, to a company or to a business organization. He have to put 19 taka as a reserve. But if I make it 20, then he can give 80 taka. So for 100 taka, he can give 80 taka. So how much it will affect the whole economy, because there's billions of taka in there. So if we increase the reserve ratio, it will decrease the money supply. So when the money supply is decreased, it will increase the interest rate. So it will increase, when it is the interest rate will increase, then the demand for money will be lower. So there will be lower investment. So the lower investment leads to the lower inflation. And when we lower the reserve ratio, the effect will be the opposite. I mean, it will increase the money supply and it will ultimately increase the inflation. And there's the open market operation. This is the most used money market tools nowadays in all over the world by the central bank. So what is open market operation? I mean, by this open market operation, we purchase or sell the treasury bills and bonds. So when we purchase, I mean, I want to increase money. I want to increase money in the economy. I want to inject money in the economy. Then I purchase treasury bills and bonds, because all the banks have treasury bills and bonds because they have to buy for requirement of the SLR. They have to buy the government bills and bonds. So for this, I will purchase bills and bonds from Prime Bank. I told them, okay, give me your bills and bonds. I'll buy it. He will give me that bill and bonds and I will pay him. So by this way, I take the bills and bonds, but I put some money or inject some money in the economy. So when the central bank purchases the treasury bills and bonds from banks, it injects the money in the economy. So it increases the supply of money. So when it increases the supply of the economy, the interest rate increase and the inflation also increase. And for the sale of treasury bills and bonds, it's just the opposite. So if I want to withdraw money from the economy, I sell my treasury bills and bonds to the prime bank. I will tell them, okay, buy this treasury bills and bonds from me. So he will give me money and I will give him the security of treasury bills and bonds, and it will withdraw the money and it will ultimately affect the inflation. So there is a repurchase, the repo. It's like I will purchase the documents, I mean the securities, and I will agree that, okay, I will purchase this securities at a later date. So this is the repurchase or repo. So repo is actually used day to day, every day. This repo is used in the money market with the central bank when I want to increase the money, or so when I want to increase the money, it's like I already told about the same way. It's like when I want to increase the liquidity in the economy, I want to increase the quantity of money in the economy, I want to inject the money, then I use the repo. And when I want to withdraw the money, I use the reverse repo, just the opposite. So repo is a tool so when central bank want to inject the money in the economy. So you can see by a repo operation, money supply increased is actually increase the inflation or increase the investment. because the interest rate will be lower. And by reverse repo, we just opposite. So we withdraw the money from the economy and it will actually decrease the inflation. And this repo also can be happen within the banks, different private banks like Prime Bank and DEB Bank or Islamic Bank. No, not Islamic Bank because they don't do this repo because these are the government securities. Like any private commercial bank can do this repo, and that's called the interbank repo. So a bank can sell his bills or bonds to other banks, so yeah, and he can get the money which can meet his liquidity crisis. Because liquidity is really very important for the money market. If one bank, I mean like farmer bank, no one will deposit his money to the farmer bank. Why? Because there's the confidence issue that you are not confident that you can get your money back. So that's why liquidity is really good, I mean, very important for the any banks. And there is a special repo. These are actually for the primary dealers and the non-primary dealers when they need, I mean, suddenly they need some money to meet some requirements, to meet some obligation, then they can have some special repo after 12 p.m. The rate is higher, that's why. So I already talked about the reverse repo, the purchase of government securities. So these are the policy implication of the that we are debt monetization. We use this debt instrument to monetization, and we increase the money supply in the money market and decrease, and we control the reserve money. And the reserve money actually give us our ultimate goal, the price stability, growth, and the what do you say, and the inflation. Yeah. So these are from me. Yeah.
All right. So if you have finished, then we can just
actually,
proceed.
sir, I mean, yeah, I can talk about things for a long time because I give lectures to BIBM and other places in these issues.
Yeah,
I mean, I already talk about the monetary money market and the capital market, but if you want to know about the foreign exchange market, I can talk about this also. But if you know, we can skip now.
All right. Okay. No problem. We actually this is actually enough for today, I think.
Yes. Because there's a lot of notes.
Yeah. Alhamdulillah. Yeah. So this is actually the banking, the financial market is a quite wide-ranging area. So there's wider scope to talk about, to discuss. I think if you don't have any critical questions, do you have any question? If you don't have any question, then we can just hand over the microphone to our honorable professor, Professor Dr. Mohammed Saiful Islam. He is the professor of economics, serving in the Department of Economics in Chittagong University, and he is serving us in the capacity of the advisor of our department. So now I would like to request our honorable professor, Dr. Saiful Islam. And in case of brother Monsoor, he is actually so kind that he has unconditionally joined with us. Whenever actually I requested him, he accepted my request and he has joined with us. So I must give you a big hand.
Yeah, it's a really honor for me also because I mean, sir joined this session, and it's really an honor for me. Yeah, so because actually when you told me that sir will join, I was going to ask you that I will not present because it will be really hard for me to present before sir. Yeah.
No. All right, thank you very much, Dr. Saiful and Mr. Mansoor. Although I don't know much about you, I think you are a faculty member of BIBM. Am I right?
No, sir, I am not a faculty member of BIBM. I'm working as a deputy director in the Bangladesh Bank.
All right. Which department then?
And now I am in Hiroshima, but before I come to Hiroshima, I was in the Department of Foreign Exchange Inspection.
Banking inspection or something like that. What is it?
Oh, no, it's about the foreign trade, foreign exchange.
All right, foreign exchange department. I understand.
Yes, foreign
Well,
exchange department.
for your information, I also worked for that bank. I mean, the Central Bank of Bangladesh, and that was in 2001 and
2001?
2001 to 2003, and then I came back.
Oh, okay.
My friends are now working as GM or DGM, something like that. So
Yeah.
I was really impressed listening from you, and it is fantastic a session. But the thing is that for our students, it was too much because they could not take so many things within this small period of time. But I think if you can manage more time for my students, then they'll be more benefited. But above all,
Yeah, actually, sir, yes. I mean,
yes.
actually, you see that I presented 3 slides. So actually, when I do some training for the bankers, or then I actually take 3 sessions for these classes.
Right,
But,
that I was taking.
Yeah,
anyway, it is wonderful a session, and for your information, for all of the participants here available, I had another lecture today from 7:30, exactly from 7:30, but I cancelled that lecture just to listen, just to join this valuable session. Because
so kind of you, sir.
Yeah. Anyway. So what you said, I hope my students, they enjoyed, and this is our success. No matter how many classes did I cancel, no matter how much time I spent here, the main thing is that our students enjoyed and they have been enriched. And I want to convey my regards and greetings to Mr. Monsoor for spending his valuable time for my students. And I will again expect from you. You actually tried to explain money market, financial market, instruments, everything. And I'm sure all you have very good idea regarding money market instruments. But I don't know how much our students got this. And for the students, I would say you should think simply about demand for money and supply of money. What is demand for money? How much money you want to hold in your hand as cash? Suppose what Mr. Monsoor said, suppose you are earning 60,000 taka every month, and then you are planning to hold 20,000 taka as cash and the rest amount as deposit or in some other assets. And that 20,000 taka is termed as the demand for money. And that is actually depending on you, how much money you will be holding. And it depends on rate of interest and amount of income you are earning. If rate of interest is high, then naturally you will think you will plan to keep your money in the banks. And as a consequence, what will happen? Your demand for money would be lower. That means an inverse relation between demand for money and interest rate. Similarly, if your income is high, then for different purposes like different motives, like for transactionary purpose, for precautionary motivation, you will keep more money in your hand, then your demand for money will increase. This is about demand side, but our lecturer today, Mr. Monsoor, he focused on supply side of money, and especially how central bank controls money supply. That has been focused, and that is really perfectly and precisely explained how open market operation and other instruments work in controlling the supply of money. And for your information, you should know one thing, that if you fail to control supply of money properly, then really you will be inviting a disaster. In what sense, do you know? Somewhere I have seen one statement that like inflation is the #1 enemy for any government of a democratic society. You understand what I mean? Suppose inflation is very high, then what will happen? People will go for agitation, and then people will try to topple the government down. And therefore, government has to be very careful in controlling the inflation. If you really want to control inflation, then you have to control the supply of money. And how to control supply of money, that has been explained clearly by Mr. Monsoor. Suppose open market, he mentioned about open market operation, about interest rate policy, how interest rate works in controlling supply of money. Moreover, he clearly explained how central bank works or what are the main objectives of central bank. There's one misunderstanding or misconception among us that central bank only prints money, and people think that central bank prints money. Whenever you find some person who is working for the central bank, maybe people like us will think that maybe this person is going to print some money and will come back with some new notes, coins, etc. But that is not the case. Main purpose, main objective of a central bank is to control inflation and to stabilize output. If you don't focus output or employment of the economy, then social imbalance, unrest will be there. At the same time, if inflation rate is high, then agitation will be there. So you have to be more and more careful in controlling both, or regulating money supply, controlling money supply, so that the desired amount of inflation, desired rate of inflation is there, and output is stable. In recent time, you have observed already the government or the monetary authority, they changed CRR, SLR several times, and that is because of Corona pandemic. Because of Corona, our economy experienced a shock, and this shock is like demand shock as well as supply shock. You know, in any economy, whenever a shock arises, it is either demand shock or it is supply shock. Suppose oil price in the world market, if it increases, but nowadays it is decreasing, it's a kind of shock as well. But it's favorable shock. Sometimes shocks may be favorable. What I was focusing, whenever a shock emerges, it may be a demand shock or a supply shock. But this time, the shock that we are experiencing, that is both demand shock and supply shock together, and really it is disgusting. And that's why government is at a loss. I mean, government is really embarrassed. I mean, at the same time, the monetary authority, they are also embarrassed. What can be done? Today they are taking this kind of decision. Tomorrow they are changing this decision. Today they are saying that we will open all things, and tomorrow they will be revising their plan. Do you know the reason behind? The main reason is that the shock that has emerged, it is a kind of shock that was never emerged earlier, that we did not experience this kind of shock earlier. That's why recent time, monetary policy authority, they changed SLR, CRR only with the objective that, for example, a government announced one stimulus package, but that stimulus package is completely based on loan from the banking system. So if banks do not have enough money to give, then how will the borrowers take money? Government already announced one lakh crore, right? Incentive, but of that 82,000, near about 82,000 crores should be from the banking system. So if the banks do not have that amount of money, then how will they lend that? In that case, what central bank did? Central bank just changed their CRR, SLR, etc., so that the amount of liquid money, because the availability of liquid money become greater, and as a result, people will be able to get more loans. And these things have been explained by Mr. Monsoor. I congratulate him, and I will again request him, if you can manage more time for my students, but you have to deliver with a bit slowly, otherwise my students will not be able to catch them up. I also want to thank Dr. Shariful Haq, who arranged such kind of session and invited such an appropriate person who could deliver something that is really relevant and befitting. So once again, I thank all of you. But what I have observed, our students, especially all our female students here, they did not ask any question, although Sharif repeatedly told them, gave them the room to ask some question. If you have any question, you can ask to our guest, or even you can ask me if you have any more questions. But last, I would again thank you, Monsoor, for this wonderful delivery. Thank you very much.
Okay, thank you very much, sir. Honorable Professor Dr. Mohammed Saiful Islam, sir, for your wonderful delivery. And to give thanks to Mr. Monsoor Rahman, who is from Japan. Actually, now it's midnight in Japan. If we just add 3 hours with this, it becomes 12 and 21 minutes. So he has taken this much pain for us, for IIUC. It means that he belongs, he actually feels like some kind of affiliation with or regards with IIUC, and this kind of cooperation will remain intact and extended whenever we demand, inshallah, in future also. And thank you, sir. If you have any, if you don't have any question, dear students, we can go for conclusion. We can finish this meeting. Yeah, Anika.
Yeah, assalamu alaikum, sir. Thank you for this session. I have a question for.
Your microphone is muted. Yes.
Sorry, sir.
Anika, yes.
Thank you for this session, sir. I have a question for Monsoor, sir. Actually, sir said that monetary policy goal for from BB, Bangladesh Bank. The first one was sustainable output and employment. So I have a question regarding this, as this is a situation under Corona, and we are facing a lot of problems, and many people are losing their jobs. So I have a feeling, or I have a thoughts like that people will not get jobs in near future, or I think in remote future too. So I think they will go for their own businesses. And what about the BB will do about the crediting system, as they have to give some credits, I think, for the general people business. And I think government will minimize the interest rate too. But if you minimize the interest rate, then the inflation rate will automatically raise. So actually, my question is, what about you do, as you were from Bangladesh Bank, and your sustainable output and employment goal, and what will you do about this thing? I think you have understand.
Yeah, I have understand. Thank you. Thank you for the question. So actually, I mean, whenever, I mean, if you read the newspaper nowadays, Raghuram Rajan, now professor of Cornell University, he was the governor of the Reserve Bank of India. He also mentioned, and everyone mentioned, whenever some economic crisis happened, it was central bank's duty to topple that economic crisis. And if you look at the economy for the last 3 months, I don't know whether you were watch it in the newspaper or not, that because for the last 3 months, Bangladesh Bank actually published a lot of new policies, for, for interest rate. You don't have to pay interest rate for a long time. You don't have to pay interest rate for the short-term loan. And we also provide huge amount. I mean, the government declares the assistance or the subsidy, but government doesn't have the money. Because how the government will get the money? Because government get the money from taxes or VAT, but when there is no economic activity, the government don't have the money. So government declared the assistance, but it is all come to Bangladesh banks on hand. I mean, we have to implement the whole thing. Because nowadays government also, as there is a corona and the economic crisis, government cannot increase the VAT or taxes in the economy, in the business, because everyone has in a bad situation. So Sir already said that we have give a lot of assistance to a lot of business, like small industries, like garments, like leather exports. I mean, if you go to the website of Bangladesh Bank, you can find a circular, and you can find that for the last 3 months, we almost produced more than 100 new rules for the bank and banking sector or the economy. Just give a simple example that like Bikash and Rocket, you don't have to pay for cash out or sending money for a certain amount because we told them to do so. We increased the cash out limit of the Bikash and Rocket and other things because you have to stay in your house so you can pay by your, these mobile financial accounts. So our one job is the unemployment, lowering the unemployment or create jobs. Now, this is the time we cannot create the job, but now our time, central bank job is to lowering the unemployment. I mean, people not lose their jobs. So what we do, we give assistance to the government because we are the economy which is run by the government sector. I mean, most of the in GDP we have a huge amount of contribution from the governments. So we give a lot of assistance to the government's company to give salary to their employee, so they can give their employee salary for 3 months, and they don't have to pay any interest to the central bank or anyone. So they can pay back us within 5 years or 10 years. So by this way, we want to run the business of this garment sector and the other sector also. I just give one example because it will. If I want to give you an example of garment sector, leather sector, SME, agriculture, credit, women entrepreneur, it will take a lot of time. But I can assure you that we have done so well. But there's also risks because we have to print a lot of money. We provide a lot of assistance to the people, so there is a lot of amount of money in the economy. It will create huge, inflation. After 1 year or something, because there will be a lot of money in the economy. But we take the risk because we know that nowadays the life of the people is the main concern. So we want to, we just take this as people have to work, people have to get their salary, and people have to get their foods. That's our main concern. So we are doing that. But as you say that business, you can take a loan because for the entrepreneur, there is also some assistance in the new circular has been issued.
All right. I think it's clear to Anika.
Yes, sir.
That recently, actually, Bangladesh Bank wants to save those who are already employed. Bangladesh Bank's now recent policy is to save them so that they do not lose their job. Okay.
Yes, sir.
And creating new opportunity, we can think later, even post-corona period. If we can save the existing ones, then the new opportunity will be created, I think, and everybody considers things in this way. So if no more question is there, then we can just come to an end.
So again, I want to ask another, and there is not a question actually. Sir is from Japan, you have already said, and I want to ask the differentiate between this our country and that country, Japan. What initiation they took actually? Do they have money or not? As you have said that we don't have money in our country, and government doesn't have any money. Does Japan have money or not?
Actually, it's not only the Japan. I mean, it's all over the world because most of the developing countries like us, government is in the deficit financing. Our fiscal policy is deficit. So government takes money from the banking sector, banking sector. So, but nowadays the banking sector have the liquidity crisis. They don't have the money, so government can't have the money. So that's why everything is done by the central bank. It's not about only the Bangladesh, Japan also, because Japan for a long time, Japan was in deflation. Japan is the only one country in the world who experienced deflation. No other country in the world, I mean, everyone considered or concerned about the inflation, but Japan for a long time, they experienced the deflation. So Japanese experience is others, I mean, is a bit different. But still in Japan, in Corona, the business is stopped for a long time. They put an emergency situation, lockdown, and this is a huge economy. So Japan Central Bank print a lot of money, and they give assistance to every people. I mean, almost every single person in the Japan got money assistance from the central bank. And there's also, I mean, they get the business also get the assistance, because it's not only about the Japan, it's not about the Bangladesh, it's all about all over the world. I mean, Reserve Bank of India, Federal Reserve Bank, everyone gave assistance to the business, to the small entrepreneur. They give some, I mean, interest rate subsidy. I mean, you don't have to pay interest for a long time. You don't have to pay the interest, interest discount and anything. So, and you will have a grace period on, and you will also find a rescheduling. I don't know whether you are, I mean, heard this word before. I mean, there is a facility like rescheduling. There is a facility like loan classification. Everything is done nowadays in everywhere, like in Japan, in China, in Bangladesh, in India, and everywhere, because there's no other way actually, because everywhere the business is collapsed. So government don't have the money, because if there is no business, government can collect the VAT or taxes or anything. Because if there is business, then government can collect VAT from the transaction. So as the business stopped, so every government in the world is in crisis of money. But I have just seen, because I heard this, I heard a lot of financial paper, and I heard that Saudi Arabian government, they increased the VAT in this situation because they are out of money. So they need money, so they just increase the VAT. I mean, for Saudi Arabia, it can be done. I mean, you can increase the VAT because the proportion of the rural people or the poor people is lower there. Most of them are, I mean, rich people. So yeah, you can increase the VAT. But in our country or in Japan or other countries, you cannot increase the VAT because people are suffering now. They don't have the income. So if you increase the VAT, it will actually, or increase the tax, it will actually impact the poor people. So that's why no government can increase the VAT or take the revenue from the business transaction. That's why central bank printing money now and give assistance to everyone, in every business, to government, to companies, to banks, to people, everyone.
All right.
So,
Okay.
Anika,
Thank you, sir. Thank you.
Anika, did you get the answer? What's the difference between Japan and Bangladesh? In Japan, the government can give money to the individuals without the fear of inflation. But in Bangladesh, if the government gives money to each individual, then there are two things. Number one is that the government has to print money because the government does not have enough money. So they have to print money. And what does that mean? That will mean increasing supply of money. If you increase supply of money, then it will cause inflation. There is the fear of inflation. But in Japan will not experience inflation overnight. And that is the main difference between these two economies. But all the countries in the world, they are experiencing this type of problem. They are experiencing problems. But the nature of problem, the solution, method, approach of solution, that should be different for different economies. But all countries are experiencing this kind of problem. So
thank you very much, sir. Actually, this is no doubt a wonderful value addition to the point. Actually, money does not matter, you see. The management of money matters. Okay, so you have seen some like 75,000 crores money has been given to the government's workers or some others. But what happened? In some points, they are being cheated, or there are some deceptions, and there are some misappropriations or mismanagement of money. Okay, so in developed countries, there are very less scope to misappropriation or mismanagement of the money. This is actually the difference in between the developing and developed countries. In United States, you see, they are sending the money to each and everyone's account. If you have a 3-member and if you don't have job, then every month you are getting $1,012, $200, that is $1,200 for 3 members family. $3,600 they are receiving every month from the government. So their taxpayers are in their reach, and they know who are paying tax, and only the taxpayers are getting that support, financial support, directly in their accounts. There is no intermediaries to misappropriate or mismanage, to make mismanagement. So there are some difference in terms of management, you see. Recently, you have seen in the newspaper that our government is claiming that our economy is this much big that it can easily be compared to the economy of Canada, you see. It is as big as the Canada. So what's going on actually? 500,000 crore, more than even. So if we could manage this amount of budget properly, then definitely it's very much possible to make our country Singapore and like any other developed country or Malaysia. Okay, so thank you very much. It's actually we have got enough time. It's around 2 hours, I guess. Thank you very much, our participants. Thanks to Brother Mansoor, and thanks Professor Saiful Islam sir. Good night, and stay safe, stay home, and save lives. Thank you very much.
Thank you, sir. Yeah, assalamu alaikum, sir.
Alaikum salam wa rahmatullah.
Assalamu alaikum.
Alaikum salam.
Allah Hafiz.
Allah Hafiz.